the Financial Survival Network, helping you to survive and thrive in the new economy. Get your free Financial Survival Toolkit and find out where to buy gold and silver safely at great prices. Sign up at financialsurvivalnetwork.com. This is the Financial Survival Network.
1490 WGCH. This is Kerry Lutz, and you're listening to the Financial Survival Network. We're all wondering, especially after listening to Andy Schectman and Andy Hoffman, about the potential shortages of metals should demand greatly increase. So who better to go to than the Mint itself? And our friend Bron Suchecki from the Perth Mint in Australia is on the line to discuss supply and demand dynamics and what you can look forward to should, and I would say when, demand for precious metals greatly increases from the current depressed level. Hey, Bron, welcome back to the FinancialSurvivalNetwork.com.
Hey, good to be here, Kerry.
And we appreciate your coming back because I know it's 12 hours. You're 12 hours ahead of us there, and you got a busy day ahead. But you raised some points that I wanted to cover with you, and that is, you're saying that should demand, meaning, as we called him last time, Joe Tupac, goes back into the market buying metals because he gets worried or feels that they're the best investment, you think that shortages are going to occur, correct?
Yeah, no, I do. I was very interested to hear what Andy had to say, and I agree with him. My point is that the industry, the minting and precious metals industry as a whole, is not really ready for any sort of significant increase in demand for coins and small bars. It's more an issue of a sort of a shortage of production capacity rather than a shortage of the raw metal, which there's plenty of coming out of mines. So the industry as a whole is really not geared up and prepared for, mass market, serious sort of interest, I suppose, what we had in late 1970s.
Right now, though, the capacity of, I guess it's the fabrication of the planchets or blanks, the ability to produce them, it's limited, right?
Yeah, no, it is. The process of making a coin, maybe just to step and explain, it's really, in broad terms, two sort of steps. Is you make the blank or the disc, which is just flat with nothing on it, and then there's a separate process of stamping in the press to actually stamp on the image. And from the point of view of stamping, that is a relatively straightforward process. So, you get your disc, put it into your automatic coin press, it slides it in, punches the coin, pops it out, you inspect it, and then you package it up. So it's a pretty straightforward process, and with automatic presses, they can churn out a fair number of coins quite quickly. The issue is in that making that disc that goes in to the coining process is actually a very complicated and messy process. So, just to describe, you've got to get some raw gold, be it granules or bars. It needs to be melted down into an extruder. That extruder strips out or pushes out a billet or a strip of metal. That needs to be sort of rolled down to the exact thickness that the coin needs to get to. And that may involve a number of passes through various mills to break it down to thinner and thinner amounts, because you can't just get a big thick amount of metal and shrink it down straight away to a short, a very sort of thin thing. So you have to sort of run it through a number of mills to get it down. Then you've got this strip. You need to then punch out the discs out of that. You have a lot of scrap that's left over. You can imagine a big strip of steel. You can only punch circular things out. You've got to deal with the waste of the scrap of that and melt that down and use it again. Then you have to sometimes go through and all that working of the metal changes the grain structure in the metal, which will affect how it stamps. So a lot of cases you have to anneal it, heat it up, so that the metal sort of grain size becomes finer or smaller. I'm getting a bit out of my technicality here, but I know there's that process involved. So, you've got all that process that goes on, and it's quite a complicated process, a lot of steps involved in it, a lot of equipment involved, and therefore not many mints sort of want to go through the process of setting up a line or a whole production facility to do that process. Particularly, a lot of mints are circulating coin mints, so they make, copper coins and steel coins. and precious metals are a side business to them. So a lot of mints will buy blanks from people that specialise in making blanks, and then they just do the minting. So there's only a handful, there's a lot of minters, but there's only a handful of people that actually make blanks.
Yeah, which is fascinating because we've been making these blanks now, going back probably to Roman times, maybe even before that, and yet the technology doesn't seem to have evolved to the point where you could just make unlimited quantities at a moment's notice, like you can stamp the coins. So this is a real bottleneck, and like you said, the U.S. Mint doesn't make its own blanks. It gets them from three places: Sunshine Minting in Idaho, Sternleach in Massachusetts, and none other than the Perth Mint in Australia. And you supply a lot of other mints. That's the bottleneck, because no matter how much gold there is, if the demand is for gold in 1 ounce coins and there's not much of a secondary market, where is it going to come from?
No, exactly. I mean, there are other sort of potential, going down the line in the future if we start to get mass market. I mean, there are other potential bottlenecks as well. In the 1980s, there were a lot more coin dealers. There's not as many now. And I do know, talking to one of our dealers, he said it during 2008, he was getting 100 calls a day or something, and they just couldn't handle the number of calls that they were getting. So there's also a little bit of a problem in the distribution chain where you just don't have as many coin dealers. I'm not sure that's as much of a problem because you have now, online methods of buying gold. So I think that the use of the internet to be able to take a lot of orders and not have to actually, have a call centre to deal with it is probably going to help us this time around. And then you have your sort of pooled, allocated type things like gold, money, bullion, vaults, and obviously the Perth Mint depository as well, so that allows people to buy into a pool of metal. So those also help do it. I can see that on the physical side, I mean, you've got to look at the industry from 1980 after the peak. The market was in a bear market, and that's not a market in which private mints, let alone government mints, but private mints even like Sunshine and Sternleach, they're not going to sit there and go, wow, we're in a bear market, let's, expand capacity. I mean, what happened is the industry contracted, and it contracted right through the chain. So refiners emerged and reduced. The bullion banks even reduced. The number of people in the bullion bank game reduced down. And the same thing with coin dealers and the like. So, that was the process from 1980 down to 2000 was a contraction in the industry because, there weren't as many people buying gold. And then in 2000, as the bull market started to get up, it was still very much everyone across the industry was like, okay, well, yeah, this is good. People are buying coins, the price is going up. But there was always a bit of a question as well, is this sustainable? When it gets to $800 an ounce or $1,000 an ounce, is that going to be it? And then the market will drop off. And so businesses in the industry were probably sitting there going, well, I'm not going to go and spend millions and millions of dollars adding capacity because I don't really know whether this market is going to continue. How long will this continue? And, maybe the government will fix everything up and the economy will be okay and, then we'll be out of, then the demand for gold coins will drop off again. So even during the bull market, right up 2005, 2006, we were making incremental improvements, replacing old equipment, but we weren't making significant capacity expansions because we weren't sure, is this bull market, how long is it going to continue? But in 2008, when that financial crisis and all the events around that hit, we had this massive increase, this very sudden, and it's very clear on any demand charts, this sudden increase in interest. And, for people who are new to buying precious metals and may not realise in 2008, the mints went into rationing, which is basically saying that there were more people wanting to buy coins and bars than the mints around the entire world had capacity to make. And they were into a rationing situation, and coin premiums on the secondary market and even from dealers started to increase.
Yeah, that's what Andy Shechtman was talking about, that he would have people during 2008 that wanted metals, and he would say, I can't get them to you. We're 16 weeks behind. Sorry. And then he also mentioned, again, no secondary market. I guess the point, Bron, is we could easily find ourselves in that situation again. I guess if you're willing to buy kilo bars or 5 10-ounce bars, you probably won't have as many production or distribution bottlenecks, but you could still have them even for lesser sought-after forms.
Well, yeah, I mean, there's a Nick Laird who runs sharelinks.com has got a number of charts on premiums, and during 2008 he started to, because the premium started to shoot up and shortages and rationing was state of play, he started to track the premiums that were being charged and got 2 charts. And it just, the 2 charts are one of the gold American Eagle and Silver Eagle. And you can see in 2008, the premium shot up to around, for gold, around 8 to 7%, whereas now the normal premiums are between 4 to 5%. And it was sustained for that period for quite a long time, or 6 or 7 months. And in the case of silver, which is normally trades at around a 10% premium to the silver value, during 2008 into 2009, I mean, it spiked up as high as 70%, but was certainly above 40% premium for a really long time, which is 4 times, the normal premium. But the interesting thing on the charts is that he does those charts as well for junk bags of silver and various other coins, and those premiums were across the board on all products. So everything started to have real big premium increases.
Yeah, I remember during 2008, 2009, there were times the only gold that could be found were kilo bars, and even those were flying out the door. So you're right, the premiums kind of spread evenly over the chart, and that means the only way to avoid this, and you're pretty convinced it's going to happen, is to buy before the shortages happen, not after. It's like you buy these goods that you know are going to become scarce when they're not scarce, to avoid having to pay the premiums and presumably the increased market price.
Yeah, absolutely. I mean, if you have the money now and you're sort of, thinking, well, I'll be able to get coins, in the future, I really think you should just, make the decision to buy. I mean, obviously relates, of course, to where the spot price of gold is. But certainly, I just think it's something for investors to be aware that even though we went through 2008 and, that did shock the industry and it changed certainly our perceptions internally when we're making capital expenditure decisions to go, okay, well, let's be more aggressive on that to sort of expand. And I know, I saw a news article in 2011 said Sunshine Mint had quadrupled their staff since 2007. In the case of ourselves, we over the last 5 years we've spent about $30 million, which is almost times 4 the sort of amount of money that we had in expenditure on capital previous to that. So we've certainly expanded up. But even so, that is still not enough to deal with a serious mass market interest, because 2008, whilst it was dramatic and unprecedented, it was, we're still talking, 1%, 2% of people at the most who've got precious metals.
That's
and
very
that's what
small.
happened, There's 1 or 2% of let's be generous and say 2% of people, started to want to buy coins. And what do we have? We have industry rationing at 2%. So what happens if we go to 5 or 10%? I mean, even with the expansion that's happened to date, it's still not going to be enough. And so I do think people need to be aware of that. And if you've got the capacity to buy and the spot price is reasonable, I certainly wouldn't be sitting around waiting. But for those investors that, obviously say dollar cost averaging in or just buying as they get savings and just want to save in the form of precious metal, something to keep in mind, I think when you see premiums go up, I think premiums started to move on coins first because people have a preference for government-issued coins. So I think consider cast bars as an option, as long as they're from a recognised refiner, brand mark, they will be okay. You'll probably find the premiums on them a little bit better. So that's something I think as well to keep an eye on. A lot of people sometimes very much obsessed about the coins and not looking at cast bars or even looking at coins from, other countries. Most people are very patriotic. We sell a lot of the kangaroo coins in Australia, obviously, and the American Eagles dominate the US market. But what happened in 2008, to give an example, is I think the US Mint started to have problems in the Royal Canadian Mint, and we were later on down the line as distributors started to look for mints that still had capacity. So you may be able to pick up in the early phases of any mass market run into precious metals. You may be able to pick up other coins from other countries, which are just as recognised at not as much premium. But I think if it's sustained and it keeps going, then we're going to find premiums being high and probably staying at least double to triple what they are now.
Yeah, that's pretty remarkable that things can change as quickly on a dime. The fact is there's so many less coin dealers, especially in the States, than there used to be. I mean, it's been a shrinking universe, and I haven't seen a lot of new ones come along even since 2008. So, yeah, they probably have the web capacity to deal with it. However, do they have the ability to deliver when it all hits the fan? That's going to be the interesting thing. We can tell everybody you heard it right from the Mint, and you still didn't listen, so you have nobody to blame but you, right?
Yeah, well, I mean, that's sort of, I suppose, why I sort of contacted you, because I just thought it is something that people need to be aware of, so they don't sort of get surprised when it happens. And I think your point about the coin dealers, and I mean, it does raise the question, I suppose, as to well, why haven't people come in? And people may be surprised at this statement, but when you can buy a gold coin at 4 to 5%, it's not a lot of profit in there for it. And I'm not sort of doing a woe is me, but you think about all these entrepreneurs. I mean, they're not moving into precious metals. They're making iPhones and iPhone apps and whatnot. But entrepreneurs are not seeing massive profit opportunities in the precious metals industry. And if you look, and I'm sure, Kerry, you talk to coin dealers, it's a tough business. There's security issues. There's a lot of issues involved in funding. Precious metals are expensive, and the margins are not that large. So overall, in terms of the profitability, I'm not saying people aren't making money in the industry, but compared to other businesses, it's not a highly profitable business. So it hasn't attracted entrepreneur and money into it. And maybe, unfortunately, what needs to happen is for premiums to move up and then, large profits to be made before other, private players will come in and start to expand or open up distribution channels and get into the business. I do find it interesting. I mean, the first phase, though, of this that gives you an indication that this is happening is entrepreneurial activities like bullion vault and gold money have come in to sort of make it a bit easier to buy online, and that has forced all the coin dealers to lift their game around online trading as well. And that's a good development, but that's a development in distribution side of the business. It's not like there's many people going around and starting up new mints. And that's a lot more. That's a lot more complicated, and it requires a lot more capital than someone to build a website, which is a lot less capital intensive. I mean, just to give you an idea, if you wanted to buy an automatic grab and a coin press, it's $1 million just for one coin press. So it's a fair bit of money. I mean, don't even factor in all the other equipment that goes around it. So, it's a substantial amount of cash that you need to invest. And so, that's the reason. And I think maybe it's unfortunately going to be a case of once the mass market demand comes in and the premiums go up, it starts to look very profitable, and then entrepreneurial money will come in and, we'll start to get increased capacity.
Yeah, often at the worst time and at the least profitable time, the opportunity gets recognized. Well, Bron, thanks so much for coming back on the financialsurvivalnetwork.com. Perth Mint, everybody knows you. We've got a link, I believe, to you on the site. And we will talk to you again in a month or two, because I have a feeling these markets are going to turn around extremely quickly. Don't know when, but I have a feeling it's going to hit, and it's going to hit so fast no one will believe it except us out there who've been telling you all along this is what you need to be doing. So thanks again, and we'll talk to you soon.
Thanks, Terry.